All right, everyone. A very, very, very good evening. How is everyone doing this one on this wonderful occasion of Christmas? First and foremost, I want to make sure that I'm able to wish each and every one of you who is attending today's third live streaming session a very happy and a very merry Christmas. I wish that you have a wonderful day, and I wish that all your wishes come true, right? Because definitely Santa Claus is hearing all our requests and prayers. So, how many of you are excited for today's third live streaming session? If yes, let me know in the comment box. All right. So everyone who has been attending all our live streaming sessions since today morning, I thank each and everyone for giving in your time, your energy, your effort, because it does require a lot of preparation, and your participation in the live streaming session makes me feel that yes, my value is my content, and my the value that I'm being able to provide to you is being reciprocated. So thank you everyone who is attending today's third live streaming session. I can see Sophia in the chat house. Hello Sophia, how are you doing? I hope you're having a wonderful day, and I wish you a Merry Christmas as well. Like always, it is always a pleasure having you in our live stream sessions, and your presence itself makes me more confident in providing more valuable content. So I hope everyone is ready, and we will be beginning our third live streaming session. So let me begin the third live streaming by giving a quick introduction about myself. My name is Harsh. I am a financial trader having 8 years of trading experience in the financial markets. I have been trading the forex markets, the commodity markets, the US based indices markets. I am more of a technical trader specializing in technical analysis such as supply and demand, price action, order flow analysis, swing analysis, wave analysis, as well as Fibonacci retracement analysis. I have been blessed to be trained and to be mentored by people who used to work as flow traders on the Chicago Mercantile Exchange, right, which is based in USA. I have also been successful in handling $25 million dollars worth of portfolio. And on top of that, I have also been able to consistently generate 30 to 35% of profitability on an annual basis. The reason for me to share all this information with you is so that you can be rest assured that the information that Harsh is providing to you is being provided by someone who has the knowledge, the experience, as well as the expertise when it comes to the financial markets. So let me ask everyone, how excited are you for today's third live streaming session? If you are excited and happy, let me know in the chat box below. All right. We would be having a lot of interaction because our live stream sessions are mainly being hosted to provide you with high value content, correct? Since today the English share market has been closed on the occasion of Christmas, we have been sharing diligently our education content, correct? Because we believe in utilizing the time that we have in providing more value. So since the markets have been closed, we have been providing you with education content, and we have been discussing quite a lot, correct, when it comes to trading logic. Let me ask each and every one of you who's attending this live streaming session, how many of you have been consistently reviewing and consistently attending all my live streaming sessions? If yes, let me know in the comment box. All right. So moving forward, let us start with today's course number 5, right? Since today morning, we have been covering course number 3 and course number 4. This is the new course that I will be talking about, and I'm sure everyone is going to gain a lot of value from this particular course. So for those of you who are excited and are eager to learn about what is going to be provided, make sure to let me know your reactions, your opinions, your comments in the chat box below. So let us officially start today's session. So moving forward, we would be talking. I can see Rocky in the chat house. Hello, Rocky. Very good evening. And it's always a pleasure having you on board during our live streaming sessions. So moving forward, we would be talking first and foremost what has been taking place based on the last class, correct? Does anyone of you who has been attending my sessions and my live stream and who have been absorbing the content that I have been providing based on the last couple of sessions, could you let me know what have been the points that have been discussed? Could you let me know what have been the prohibited actions and the corresponding solutions that we had been talking about in the previous session? If you know the answers, please do not hesitate to write down in the comment box. All right. So let me inform the points, and let us have a quick recap in terms of what points had been discussed in terms of prohibited actions. There are certain actions that people have been consistently making in the financial markets, right? And that is one of the major causes for people to suffer losses. Correct, Sophia? And Rocky is writing, going very well. So that's very good to know, Rocky. So in terms of the prohibited actions that people have been undertaking, because of which they have been resulting in losses, which are they? First and foremost, rushing to buy, correct? If you are able to recollect, that is well and good. If you're not able to recollect, I would highly suggest you to sit down with a pen and paper so that I can tell you the points and you can write it down as well. If you do not want to do that, the best option for you is to go and check my previous videos in which I have talked more in detail about the prohibited actions and the corresponding solutions. But now I'm just going to give you a quick and a short recap. All right. So in terms of prohibited actions, the first point is going to be buying or rushing to buy, correct? How many people have the tendency of rushing to buy? Because of, it could be FOMO, that is fear of missing out. It could be because of majority of people buying. So if majority of the people are buying, we feel that we should be buying as well, correct? That is called as herd mentality. So first point is rushing to buy. Okay, second point is going to be being too greedy when selling. How many of people have made the same mistake where they have expected to take a trade on a particular stock, expecting that the prices will be going to the moon, correct? Everyone who is entering into the stock market is coming with the objective of making money, correct? But every time or most of the time, people are over ambitious. Am I correct? If I am, let me know in the chat box below. So when people are being quite over ambitious, they prefer to let their trades run, expecting or hoping that they will be making money, additional money, or huge profits in the market. But in reality, that is not the case, right? Because the market is based on price differences. and because of volatility, because of supply and demand based on human emotion. So there are so many factors that are playing into the market. So just because someone expects that the price should go to a particular level, that is not necessarily true. So people let are or people are very greedy in terms of letting the trades run and are hesitant to close their profits, right? I hope people are understanding. So being too greedy when selling. Third is going to be delaying stops or not cutting stop losses quickly. How many of you have had this particular scenario where when you should be closing a stop loss, you do not close the stop loss, and when you should have prematurely closed it only after time and after the trade is heavily in losses, that you remember that you should have done it, right? We had given you the example of how someone who falls ill can go to the doctor to rectify their ailment, correct? Every one of you who is attending these live streaming sessions at some point would have fallen ill, correct? So you would be going to the doctor, but there are many who do not go to the doctor because they think it is not of prime concern. Only when it starts to get serious and severe, that is the time they recollect or remember that they should have gone, but it's already too late. So I hope you're getting the point. Delaying stops and not cutting the stop losses when required, correct? Fourth point, for the prohibited actions, remember everyone, I am talking about the prohibited actions. So there are 4 points when it comes under prohibited action. So the fourth point is going to be over diversifying. How many of you have been over diversifying? Let me know in the comments box, all right? So when it comes to over diversifying, I have also been a culprit myself in the past, and many of you have been as well. Rather than taking few trade, many people have the tendency to over diversify because they are told not to put all their eggs in one basket, correct? It is true that you should not put all your eggs in one basket, but you should not have many baskets that it gets hard to handle and maintain. So over the diversifying, I had also mentioned you a particular number in terms of number of trades that people should be diversifying till. Does any one of you recollect how many trades can someone take in their accounts if they are a retail investor? Do you remember the number? If yes, let me know in the chat box. Rocky is writing, but you don't provide stop losses on hot stock positions you gave. Isn't it contradicting to your action? Do not worry, Rocky. I know you had this. I was aware that this question would be coming up, and I would be definitely answering you this particular question as and how the time progresses. All right. It is just a matter of time. Let me cover the content of this particular live streaming session, and you will have a much clearer understanding. All right. So I hope you are understanding, Rocky. You are telling very right about stop loss, but your actions are not the same while providing hot stock. Do not worry, Rocky. I do understand your concern, and I will explain you why we approach the markets the way we do. All right. So we are telling that risk management is very important, and we will inform you how we are going to mitigate the risk. All right. So do not worry, Rocky, because like I say to all my friends, to all my clients, and to all my viewers, when Harsh is here, there is nothing to fear. So these have been the 4 points that are of prime concern in terms of prohibited actions. These are the 4 points that I have discussed, which people make again and again. The mistakes that are being made by people on a consistent basis, leading to big losses. Do you agree with me? Let me just reiterate it quickly. Rushing to buy. Being greedy when selling in terms of closing positions, delaying stops, not putting or not closing their trades when they should, and fourth is over diversifying. Moving on to the next point, that is in terms of the corresponding solution. So I have mentioned you what are the prohibited actions that people have been taking. Now, what are the corresponding solutions? So anyone aware of what are the corresponding solutions to the prohibited actions that I have just mentioned? Anyone who would want to answer, let me know in the chat box below. So let me say it out, right? So in terms of corresponding solutions, the first one, where I had mentioned that people are rushing to buy, you have to buy calmly, all right? Then the second point, in terms of mentioning when people are being too greedy when selling. You have to sell without greed. When it is time to book profits, you need to book profits instantly, right? Not expecting, not hoping that the markets are going to rise, so on and so forth. Third point we had talked was not cutting stop losses quickly, correct? And what is the corresponding solution? Closing the trades when you know that you are, when the markets are going against you. Fourth point, that was about over diversifying. So the corresponding solution is going to be not over diversifying. So coming back to the question that asked, does any one of you remember what is the maximum number of trades that should be placed in terms of diversification for a retail investor? If you know the answer, let me know in the comment box below. So the answer is five. You shouldn't be diversifying more than five stocks for an account that is coming into the retail investor sector. So I hope everyone has understood what have been the prohibited actions and what are the corresponding solutions to it. All right. So now we are going to be moving on to risk control. How many of you are aware of what risk control is? If you are, let me know in the chat box below. Sorry. If you're aware, let me know in the chat box below. All right. So in terms of risk control, remember when it comes to trading, it is not about the markets mistakes that scare us, but the hesitation to correct them. How many of you agree with me on this particular point? It is not the mistakes that we keep making, but it is the hesitation or the ignorance when it comes to rectifying our mistakes. If you agree with me, let me know in the chat box below. Rocky is writing, but why have you made entries into 10 to 12 stocks and still holding? Do not worry, Rocky. That is how we are just showcasing everyone the power of Dolphin Markets in terms of providing hot stock recommendations. But when it comes to the individual trader and investor, we are informing them based on their size allocations. They shouldn't be taking more than five because it is for their betterment. But we are being FII, we have the funds, we have the liquidity to take maximum number of trades. So we are capable of taking multiple trades, more than five trades. Remember, I was talking to you about retail investor. We at Dolphin Markets are not retail investor, we are FII. So we have the potential to take more than five trades. But when it comes to our viewers, our clients, we just want to showcase that first and foremost, it is possible to make money in the markets and it's possible to make money consistently. Now we will also be informing our clients that moving forward, if you are in the bracket between a few thousand rupees to below 30 crores, you fall into the retail investor category, correct? And for you, diversifying more than five is not a good option. Now returning back to the to the PowerPoint, in trading, it is not about the mistakes that scare us, but the hesitation to correct them. So people need to be aware that it is first and foremost take the responsibility and accountability that yes, mistakes have been made by us no matter what, and start to rectify them. If you agree with this particular point, let me know in the chat box below. All right. So everyone is making mistakes. Remember, no one is 100% right. Whether me, whether you, whether anyone on planet Earth, everyone has been making mistakes, correct? But because trading is a matter of probability, so making mistakes is not dreadful. Many people think that we have to be correct for every single trade that we take. But in reality, that is not the case because trading, sorry, trading is based on probability and not certainty. So making mistakes is not dreadful. All right. So, Rocky, do not worry. I know you have a lot of questions and you're very inquisitive in terms of knowing the answers. And I will do my best in terms of rectifying all your required doubts. Does that sound good? Then that is good. So, we were talking about trading being, based on probability. So, making mistakes is not dreadful. What is dreadful is knowing that it's wrong, but still persisting and refusing to give up. It is a very important and key point to remember because if you're not willing to accept that you are wrong and if you still continue to carry on the same same routine, same methodology, same strategy that has been making you lose money. It's going to make you lose money in the future as well. So I hope everyone is understanding with this particular point. If yes, let me know in the chat box below. All right. And unfortunately, this is human nature. So we have a habit of repeating mundane tasks and activities, and we get so entrenched into repeating them on and on and on that eventually we forget to understand that is it actually right in the first place, or are we doing completely wrong. But this unfortunately is a human nature, and this is something that we need to be working about, right? How many of you are understanding this particular phenomenon and topic? If yes, do let me know in the comment box below. So moving forward, we will be talking about how to set stop losses. So Rocky, do not worry, that is what our topic is about, and we will be discussing in greater detail how to set stop losses. All right, are you willing to learn? Then let me know in the comment box. And a question for every one of you: how many of you know what a stop loss is? If you know the answer, let me know in the comment box below. All right. All right, so let me ask you a particular scenario that takes place. All right, how many of you love to have different scenarios? So let me enact a particular scenario where will you use a stop loss if you lose 10%? All right, think about it, because it is a very important question that can help you in the future as well. Will you set up a stop loss if you lose 10%? If yes, let me know in the chat box below. All right. All right, now another scenario for all of you. Will you be setting up a stop loss if you had to lose 20%? All right, it is similar to the first scenario, but now instead of 10%, you are on the verge of losing 20%. So if you were to set up a stop loss, will you be setting up a stop loss if you would be losing 20%? If yes, let me know in the comment box below as well. Okay, all right, we are getting answers. Good. Now, what about scenario number 3? Will you set up a stop loss if you had to lose 50% of your trading capital? If you would be losing, let me know in the comment box. Would you be setting up a stop loss? All right, so we have been getting answers where people are saying yes, some people are saying no. I mean, okay, so we are getting a very varied options of answers, right? So based on data from the stock exchanges, 90% of investors and traders lose money regardless of whether the market is in a bull market or in a bear market. Have you been aware of this particular what you call data that has been published? Remember, most of the stock exchanges are openly letting everyone know in terms of the information that around 80 to 90% of traders or investors who enter into the markets are losing money. So based on the mentioned 3 scenarios, it is evident that no matter whether you're putting your stop losses at 10%, whether you're putting your stop losses at 20%, whether you're putting your stop losses at 50%, based on the data that has been collected from the stock exchange themselves. They have been published. It's a report that has been published that has been telling that over 90% of stock investors or traders lose money, irrespective whether the markets are in a bullish phase or bearish phase. Have you heard about this particular recommendation? Have you come across this? Have you come across this report that showcases the data? If you have, let me know in the comment section below. All right. So people have to be aware that overall market movement has little to do with individual stock holdings. Before I talk about this particular point, you have to be aware that in the Indian economy, based on the last couple of decades, the markets have been on a bullish run phase, right? How many of you are agreeing to what I'm saying? Let me repeat it once again. Based on the last couple of decades, based on Indian economies, performance based on the last couple of decades, the markets have been overall on a bearish phase, right? Bearish sentiment. Yet, most of the people, most of the traders are losing money. So you have to be very much aware that it is not that the markets are bullish or bearish that people are losing money. It has to do very little with the overall market conditions, right? You have to understand the correlation between the overall market conditions and with your individual stock holdings has very little correlation. If you're understanding, let me know in the chat box below. All right, even during decades of bull run in the Indian economy, why are people losing? If the economy is rising and people are buying stocks, technically people should be making money, but unfortunately that is not the case. Majority of them are losing money. So you have to be very clear and precise when it comes to such information, right? So coming back to the scenario where we were talking about, if we had to enact a scenario where if we were taking a 10% stop loss on trades, and unfortunately if we had a very bad streak where 10 trades had been hitting our stop losses, what would be the outcome? Could you let me know in the comment box below? If we had 10 trades and each trade had a 10% stop loss level, what would the outcome be? So correct, the outcome will be you would be wiping out your entire trading capital. Do you understand what I'm saying? If 10 trades had been taken and unfortunately all the 10 trades have they hit the 10% stop loss, because trading is based on probabilities, correct? So anything is possible in the markets. Trading is as good as flipping a coin in the air and expecting whether it's going to be heads or tails. So looking at the scenario, if we had to go with the mindset that let us put a 10% stop loss on each and every trade that we would be taking, and worst case scenario, if we had 10 trades that had gone against us by stopping us at 10% 10 times, so that would evaluate to 100% loss, right? That is as good as wiping up the account. Isn't it true? Has it happened with you in the future, in the past? Let me know, correct? So let us try to look at some important points, right? Many people might be saying that, Harsh, that is not the case at all. It is very, or it is impossible for such a scenario to take place. Yes, we might be having one or two stop losses, but 10 stop losses, come on, it's never going to happen. But to your surprising, or to your, you know, to surprise everyone or to amuse everyone, please be aware that such a scenario is very, very recurring in the markets, correct? When people think that, okay, it can never happen if I take 10 trades and all the 10 trades go against me, it can only happen in movies, or it can only happen, in a hypothetical scenario. But it is not at all the case. It is very much a practical scenario that keeps taking place in the markets. So you have to be aware. It's not just about bad luck. It is a reality for these things, correct? Many people strictly enforce stop losses, but their account balance dwindles. So people might be thinking, because if I put a stop loss, I would be managing my risk. I would be letting the trades, I would come out at trades at a loss and I can re-enter the trade. But you have to understand, whenever you take a stop loss, whenever a stop loss hits, your profit, your account size diminishes, correct? So people have to be aware. It dwindles, it diminishes as and how you keep taking stop losses. Therefore, risk control is a tool to safeguard our accounts, but it is not the only one. So Rocky, we would be talking more information about this, and as and how we keep progressing through towards our content for today's session, you'll be having a clearer understanding about why it is important, about why it is important to manage risk. But putting a stop loss is not the only way to manage risk. There are many other methodologies when it comes to managing risk. Does that sound good? So let us continue. So trading is about studying entry points, and it is not about studying stop losses, because future market movements are unpredictable. You have to understand, and I have kept repeating time and time again, that market is based on probabilities and markets are not based on certainties. So first and foremost, please be clear that rather than focusing on where should be putting your stop loss levels, you have to be aware of where you should be putting your entry levels. It is all to do with where to enter, not just entering and putting a stop loss because it might safeguard you from a small loss. It all boils down to strategy, concepts, and psychology. So we will be discussing much more in detail in the other live streaming sessions. But as of now, the point that I'm discussing, whether that is about trading, is about studying entry points and not about stop loss points, right? So I hope everyone is aware. What if the market starts to rise again after you have expected, as expected, after you have taken the stop loss? How many of you have had scenarios in your trading accounts, in your trading journey, where the markets had, been falling down? You expected the markets to rise, so you entered and you put a stop loss at X percentage, right? Everyone has a different calculation when it comes to stop losses, but for whatever reason, the markets went, hit your stop loss level, and then reverse. If a scenario such as the one mentioned has happened, let me know in the comment box, right? I want to know your answers for these. So I hope people are paying attention and people are saying, yes, we have had scenarios where we have occurred where prices just hit our stop loss and return back. So in such a case, when such a scenario takes place where prices just hit your stop loss and go in your direction, what happens? Your mindset collapses, right? You feel frustrated. You don't know what went wrong. You think that someone is there in the market being an enemy, taking funds from the market, taking your trading capital from your account to theirs, right? Your mindset collapses. You might regret why you put a stop loss, correct? How many people have had similar experiences when they have been trading in the markets? If you have been experiencing these scenarios, these situations, let me know in the comment box, correct? So if you would have done this, this could have happened. If you hadn't put this, maybe I would be making money. So all these thought processes keep running into our brain and it affects our mindset, correct? If you agree with me, let me know in the comment box, correct? So going through this process again and again will definitely end your trading career. How many of you have experienced this in stock trading? Let me know in the comment box. Whenever you put a stop loss, the market goes to the stop loss level only to react and return back to where you had initially expected prices to attain your target profit level. If such scenarios have happened to you, I want to know your answers in the comment box, right? Do let me know. So you have to be aware that everyone has been making losses in markets at some point of time or the other. It is not about being ashamed about or being embarrassed about making losses, right? It is high time that you take responsibility for yourself. How many of you are willing to take responsibility for yourself? If yes, let me know in the comment box below. It is very important to understand that first and foremost, you have to be vulnerable. Does any one of you know what vulnerable means? If yes, let me know in the comment section below. So vulnerable means being susceptible to changes, right? If you know that you have been making mistakes in the past, first and foremost, you have to acknowledge that yes, I am making mistakes. If you are not willing to accept that you are making mistakes, how can you rectify the situation? Think about it, right? It's a very important question. So do not be embarrassed. You have to start taking accountability for your actions for yourself. Only by taking accountability can you shift your mindset. Shifting your mindset can bring big changes into profitability in terms of making profits in the markets. If you understand what I'm saying, let me know in the comments section below. So do not be embarrassed and you have to start taking accountability, right? Start taking responsibility for yourself, correct? Our courses are designed based on the content that we have been sharing to our customers since the last 3 months. Our entire content has been designed in terms of providing you with value content, correct? whether it is market analysis, whether it is hot stock recommendations, whether it is education. So being aware that we are able to provide you with the content should first and foremost ignite a spark of curiosity that yes, there is someone out there who is willing to understand our emotions, our difficulty, our challenges, and is willing to resolve it from a intracellular level, right? What do you mean by intracellular level? From the microscopic view all the way to the microscopic view, right? If your fundamentals, your basics, your basics are not clear, how can you improve the advanced technicalities, right? So please be aware to keep attending all the live streaming sessions. And if you have any questions, any queries, like always, feel free to mention it in the chat box below. All right. So moving forward, as I talked to you in terms of our content that is being focused on providing exactly what is being required by our customers, let us move on to the next topic, and that is going to be based on many people have been trading stocks for years. Am I right? How many of you have been trading stocks for more than 2 years, or more than 5 years, or more than 10 years? How many of you have been trading? If you have, let me know in the comment box, correct? So many people have been trading in the financial markets for years, but they still don't know how to do it properly. How many of you are facing the same situation? If yes, let me know in the comment box below. Have you been trading for years but are still facing failures in trading? If yes, let me know in the comment section below. All right. So, for instance, many people don't think about these particular scenarios, but it is very important to understand. For example, how much capital do you use for trading? How much capital do you allocate for each individual stock? When do you exit a trade after making a profit or a loss? Majority of the people who are entering into the financial markets, into stock trading, are just coming with the aim of how much money can I make every day, correct? I'm sure everyone starts the day by telling, how much am I going to make today? And that is the wrong approach. You have to think from a bigger perspective, right? What capital should be allocated for trading? How much capital should be allocated for each individual stock? And where am I willing to close my trade, whether it is making me a profit or whether it is taking me for a loss? These are some of the instances where you need to be clear, correct? Many people are still not having any concept of these factors that I have just mentioned. Think about it, right? Because many people are like, okay, what should I do about learning? I want to make money. And they enter into the markets, they make a little bit of money, but after some time, they lose everything, correct? How many of you have faced such scenarios in your own trading accounts? If you have faced such scenarios, let me know in the let me know in the comment box below. So there was a scenario, there was an interaction with one of my long-term clients, and I had also asked them in terms of um, I wanted to ask them before joining our live streaming session, what exactly were they doing in terms of making money? How they used to, figure out a way how to make money. And they relied, what they said is they rely on other people's advice. Now think about it. Shouldn't you have a curiosity based on the particular slide that I'm showcasing? When I talk to people and when I'm able to connect with them at a personal level, that is when they reveal the truth. So many people who have been trading for years, they have no clue how to trade properly, what to be, how to allocate funds for investment or trading, how to allocate funds for each trading, and where to exactly be precise in terms of closing a trade, whether at the profit or the loss. So many people are not having any clue. And when they do not have any clue, what is the next best option? All they do is they rely on other people's advice. Now, some people might be providing them with good advice. Some people might be providing with them with bad advice, correct? There is no such thing as universal advice that is 100% correct. How many of you agree with me? If you do agree with me, let me know in the comments, in the chat box below. So the basic logic of stock trading is unclear to many, which explains why they are not able to make money, whether they trade by themselves, whether they rely on other people's um, strategies, recommendations, or whether they rely on other people's opinions of what can be expected in the stock market. So the basic logic itself is unclear, and that is one of the major reasons that people are unable to make money in the financial markets. Correct. So stop losses involve static or constant risk, such as when the markets start to retrace after you have entered a trade, which all traders encounter. What do you mean by static or constant risk? Could you let me know in the chat box what is your interpretation of what is a static or constant risk? Do let me know in the chat box below. So whenever we take a trade, right, for example, because we're talking about stock trading, whenever we buy a stock expecting the prices to rise, whether it is at X, Y, Z price level, it is irrespective. But the general tendency, whenever we take a stock prices, do the stock prices rise instantly after we enter the markets? Let me know in the comment box below. Whenever you take a trade, does it always happen that you enter a trade and that goes in your direction? No, correct. Maybe once or twice it might happen, but overall, majorly you will be having where the markets are retracing. So whenever the markets are retracing, and for those of you who put tight stop losses, there is always going to be constant risk which involves whenever a stop loss is placed. How many of you are understanding? I hope, Rocky, you are now able to get a better and a clearer perspective in terms of what exactly are we trying to provide you in terms of risk management, right? So constant static or constant risk always prevails in the market whenever you take a trade, right? Now, whether the market gets corrected by 1%, 2%, 3%, 4, 5, 10% is out of our control. The markets are based on probabilities, and we ourselves are not sure what the markets will perform for tomorrow. So you have to be aware of these situations where whenever a trade is taken, there is always going to be a factor of doubt how much the markets can retrace, and putting a stop loss only accentuates or makes the situation more aggressive in terms of, okay, I want the prices to come to here, then I will exit a loss. But many people, like I've discussed before, whenever the markets come and hit your stop loss, the general tendency for the markets is to reverse after hitting your stop loss. Am I correct? If you're understanding and if it has happened with you in your previous trading phases or journeys, let me know in the comment box below. All right. So it is up to us to decide whether to exit with a small loss or to reduce risk through hedging and averaging down. So, Rocky, now we're getting a more clearer understanding why it is less susceptible to put a stop loss, but rather think of other parameters of risk management, which could be hedging or averaging down. Because when it comes to stock trading, the overall context of prices is to appreciate towards the upward direction, right? To turn and be bullish. Because that is the ultimate motive of stocks to be listed on the national stock exchange. So it is up to us whether to decide whether you want to take the loss or whether you want to implement other risk parameters such as hedging and averaging down. How many of you are understanding this point? If yes, let me know in the chat box below. Stop losses also involve systemic risk. So we talked about static or constant risk, but it also involves systemic risk, correct? Now, any one of you who would want to answer what systemic risk is about, if you know, let me know in the comment box below. So systemic risk is for, like big banks, institutions, or the FII, the foreign institutional investors, when they have been constantly exiting the market. Remember, even for the Indian stock market based since the last couple of months, there has been a huge correction in the markets, correct? So when there is a huge correction of the markets, the main player who's responsible for the correction in the indices is going to be the FIIs. So when the FIIs themselves are exiting trades from the Indian economy, or pulling out their funds from the Indian economy and putting it into other economies across the globe, that is called as systemic risk, which is out of our control. No matter how thorough analysis you could have done, no matter how thorough technical analysis, fundamental analysis, sentimental analysis you would have done, if there is systemic risk, there is going to be a bearish sentiment in the markets. I hope everyone is understanding. So, if the foreign institution investors are pulling out funds from the economy, the indices start to plummet, the indices start to go down. And if the indices are starting to go down, the stocks, the individual stocks themselves will continue to go down as well, right? How many of you are able to understand? If yes, let me know in the comment section below. So, in such a case, when the markets are correcting, whether based on static risk or systemic risk, what would you decide to do? Would you decide to choose to exit the position with a stop loss, or whether you would decide to hold on? Let me know your answers in the comment box below. So people are saying, yes, I would decide to exit my trades at a loss. Some are writing, I would decide to close it, and I would decide to hold on. Remember, there is no such thing as right and wrong, correct? Regardless of your response, I want to tell you that we all are facing the same systemic risk. No matter how good we get in trading, if we expect the stocks to rise based on our calculations, based on our research and analysis, but if systemic risk prevails, when the FIIs, the big banks institutions, which are controlling the market movement in the controlling the flow of liquidity in the Indian markets, if they themselves are being bearish, you cannot do anything but for the markets to go down. I hope people are understanding. It is very important to be aware of systemic risk. No matter how good advice or how good recommendations anyone can provide, but if the markets are prevailing or having bearish sentiment, there is tendency for the markets overall, I'm saying majority of the markets will be having a bearish sentiment as well. So at this time, what needs to be done? At this time, we need to stay calm and not be swayed by market panic. Remember, since the markets have been corrected by almost around 11.5% since end of August, right, or end of September, people have been in a frenzy. People have been in a panic frenzy. People have been panicking and getting scared, and people are creating rumors, adding to more scarcity, adding to more pessimism in the markets. Now, when such a scenario takes place, fear sells faster than greed. How many of you have heard this particular quote that I've just mentioned? Greed sells faster than fear sells faster than greed. When the markets are appreciating in value, the inclination of the prices to rise will always be at a slower pace. But when the markets are dropping or tanking because of fear in the markets fall instantly, right? For example, if it took 4 years for the markets to appreciate from, for example, 100 rupees to 1000 rupees, the fall from 1000 rupees to 500 rupees will not happen in 4 years, but will happen in less than 4 weeks. That is the power, or that is the disturbing power of the markets based on people's fear and anxiety in the markets. So when people are being fearful, we need to be the complete opposite. We need to stay calm, and we do not have to be swayed by market panic. How many of you are able to understand this particular point? If you are understanding, let me know in the comment box below. All right, so moving on to the next slide, we are going to be talking when there is systemic risk. Both institutions and retail investor traders have positions. Always be aware, systemic risk is mainly pertaining to the foreign investment institution. But does that mean that there are only foreign investment institutions in the market? Not at all. There are also domestic institution investors in the market. So even those big local banks and institutions who comprise of DII, the domestic institution investors, they are still in the market as well. So you don't have to be worried when it comes to systemic risk, right? Because there are other big players in the market who still have positions, whether they are the big players in the market or whether they are retail investors. There are positions that are still running in the stock market. How many of you agree with this particular point? If you do agree with me, let me know in the comment section below. All right. So if institutions are not afraid of losses, we as retail investors or traders shouldn't be afraid as well. The biggest crux is that people are facing the biggest or the most disturbing factor that people face in the markets is they panic. All right. When fear and greed prevails in the market, it creates a panic situation. When greed is being in the market, people are over optimistic or over ambitious. When fear sets into the market, there is a lot of panic, there's a lot of uncertainty, and because of the different behaviors or different emotions that people go through, many people are not willing to endure what the markets can provide them in the future, and they start taking losses. Correct? You have to understand, if the big banks and institutions, right, I'm talking about the DII, no matter based on the systemic risk, when the FIs are pulling out funds from the economy, if the DIIs are still being prevalent in the market, you can be rest assured that they are also in the markets. And if they are in the markets, we should also have no fear of being in the markets when the markets are having systemic risks. How many of you are understanding? If you are understanding, let me know in the comment box below. So remember, there are going to be situations where we should be using stop losses, and there are going to be other situations where we can hold trades, right? So we will be talking about this particular concept in more detail in the coming sessions, but just be aware that there has to be a difference. There's a fine line between madness and smartness, correct? So there is a fine line between madness and smartness. We need to know when to close positions and when we can hold trades, right? So I hope people are understanding. If you can't distinguish between them during trading, you can always feel free to contact my assistant who will let me know, and I can help you rectify the issue. So any one of you who have issues in terms of whether to let the stop losses run, or whether let the trades run, or whether you have to close the trade at stop losses, you can get back to my team of assistants and they will provide you with the right set of information. So I hope everyone has had a good learning experience for today. Today has been a great journey with 3 live stream sessions, providing with 3 educational content sessions, right? Each content session has been immensely valuable for everyone who has been attending. For those who have attended till the end of the session, a big congratulations to each and everyone. I'm proud of you, and I thank all of you for being till the end, because your participation in the live stream session only makes me perform better and provide you with more value, all right, in terms of content sharing. So I hope everyone had a great day. I wish everyone a Merry Christmas once again and a Happy New Year as well. So make sure you're coming again for the for the first live streaming session tomorrow, where the stock market will be up and running and we will be analyzing the markets. And if we come across any hot stock recommendations, we will be sharing it to you. So everyone have a great evening, and I will be seeing you tomorrow. Until then, namaste and take care.